Do I think we're in a crypto winter? No, I don't think we're in a crypto winter. I think we're fighting through a lot of macro issues, right? Like people are uncertain about the degree and extent of regulatory intervention and what'll happen. They're uncertain about geopolitics, be it either, Russia, China policy on crypto versus, Ukraine and the like. They're uncertain about monetary policy. Like they're like, oh, there's no inflation, so Bitcoin trades down. Oh my, there's massive inflation and the Fed's going to raise interest.
Crazy.
So yeah. Bitcoin trades down. The second thing is all of these public companies, like public Bitcoin miners, as they come public and they raise capital, they're stabilizing the entire asset class. I don't know if you noticed, but Marathon did a big convert offering, $650 million a few months ago. And then just yesterday, I think they announced a $750 million ATM equity shelf registration. Other miners, Hut 8 have announced another shelf registration. Riot did a $600 million equity raise. There'll be 24 companies that will be public by the end of the quarter. TeraWolf came public. Core Scientific came public with a multi-$100 million equity raise. Anytime a Bitcoin miner raises money, there's only one thing that's happening there, which is that means that money's being spent either on mining equipment or it's being spent on Bitcoin. But ultimately, it's really being spent on Bitcoin because if they have the capital, that's that much less Bitcoin they're selling. And so this whole crypto winter idea was boom and bust cycles and living through the 4-year halvings. But what happens is once half of the hash power of the network is public, I don't know if you noticed, the Bitcoin Mining Council is like 46% of the hash power of the network now. And most of them are, not all of them, but a lot of them are public. As those companies come public and they buy up the private miners and they issue equity and they issue debt, then the amount of Bitcoin they sell decreases and the stock to flow increases. And the stock to flow eventually goes to infinity. And that means the available supply, each day goes to a trickle, and that creates price pressure. So those dynamics are going to decrease volatility. If banks are able to hold Bitcoin on their balance sheet, like the big banks, they get comfortable, and FDIC guidance would be a critical catalyst there, then you're going to see a big demand. And then if you see companies like Silvergate Bank issued credit lines, if you have FDIC insured banks, they get a green light to do stable coins, a green light to get into crypto lending, then people that own Bitcoin don't have to sell the Bitcoin. If they don't sell the Bitcoin, instead of holding it for 4 years, they hold it for 8 years. If they hold it for 8 years, it's the same as the stock to flow doubling. I think the first decade, you saw these drawdowns of 80, 85%. And I think in the last 2 years, we've seen drawdowns that are like maxed out at 50% or so. Might have been a 55 or 53% or something. But the volatility is less. I think that the asset class is maturing. I guess, there are a lot of reasons why the asset class is volatile. The lack of wash trading rules, the extreme leverage, the cross collateralization, the security tokens, the 24/7, 365, the uncertainty, the accounting treatment, right? I could give you a litany of why it's volatile. I could tell you why it's getting less volatile, and that's as more institutional investors come in, and as their time horizon gets longer, it'll get less volatile, and it will get less volatile as more regulation comes. And ironically, a lot of things that people think are bad will actually be good for the asset class. Like if the House decides that they're going to implement the wash trading rule, and that means you're not allowed to sell something and buy it back the next hour, if that happens, a lot of fast money trading will be discouraged. Right,
that would be good. That would be good for the space, I believe.
That would decrease the volatility. Yeah, because like right now, if Apple stock traded down 10%, you don't sell 100 billion of it and buy it back in anticipation of tax harvesting, because you have to wait 30 days before you can buy it back. So Apple stock is less volatile because of that rule. But the cryptos don't have that rule. So it's like the tax law encourages you to sell whenever you have a loss.
Yeah.
Right. And that's kind of like, that's a green light for fast money traders to come. And they're like, since they should sell and they know you should sell, then they're going to make you sell so they can buy back cheaper. And so you've got some built-in structural incentives for it to be volatile. Yeah, I think Bitcoin's crossed the event horizon. That is, it is universally acknowledged digital property, and the use case for digital property is certainly $100 trillion type market. And if you want digital property, you want something with a protocol that is so stable that 100 years from now, you don't expect any change. Even 1,000 years from now, you don't expect a change. I surveyed my Twitter followers, and on average, they think Bitcoin will be around for 3,800 years. Okay, so you want something which is a firm foundation that is not changing, and Bitcoin is really perfect for what it is. I think with regard to market cap numbers, the issue with market caps is if I have a very thin float, if only 1% of the tokens trade, then I can calculate a market cap, but that's not the same as the effective liquidity. What you really have to do is look at liquidity. And ultimately, I don't really think it makes sense to compare market caps to come to the conclusion. And even on a liquidity level, I don't think it matters that much. Like, for example, let's take Tether or a stable coin. They trade massive amount every day. If you go and you look, like
for sure, yeah,
$40 billion a day. Okay, does that mean that Tether is going to replace Bitcoin? No. I think that the best way to think about this is there are different use cases. Do you have a digital exchange? Do you have digital art? Do you have a digital currency? Do you have a digital property? Bitcoin is digital property. It's not digital art. It's not a digital currency. A currency needs to be a medium of exchange you can transmit without a tax obligation in a compliant fashion. Otherwise, it's not a currency, right? So a stable coin can be a currency, if the regulators tolerate it. That's a currency. All these things have their own different market, and they have their own regulatory dynamics and their own competitive dynamics. And if you segment the market that way, Bitcoin's really competing against like-kind proof-of-work networks that aspire to be digital property. And you could probably say it's like the forks, and you saw what happened with Bitcoin Cash or Bitcoin Satoshi Vision, and they will be whatever they will be. And I think that if what you want is something that'll last hundreds of years, that's not going to change, then you want a Bitcoin because you value it.